Okay, welcome. Thank you very much for joining us today. We are on the OPN Ask an Angel podcast. This is, I should actually get the exact number, but I think let's just say we're between 40 and 50 of some great interviews that we've had with angel investors across the globe. And today we're with Kay. And Kay, the best way to start this off is for you to give a bit of a background on yourself.
Sure.
Where you've come from, what you've done, and kind of where you're at now. And then we're going to just dive right into a conversation and we'll go from there. And
Sure.
At the end of it, give me one thing that nobody would know about you.
Okay. Do you want me to tell you the long story or the short?
You do what's best to give you enough information. We want to understand more about you and how you think and why you're doing what you're doing.
Yeah. So, okay, I'll give you the story that I tell everyone. So I'm Kay, also known as Enterprise Guy. It's sort of cheesy, but there's a story and logic and strategy as to why I chose that stage name, right? And there's a reason why I chose a stage name. So I'll tell you the story. Everything for me started 4 years ago when I left the financial services industry. And the reason why I left was conflict of interest. What I realized is that working there, they wouldn't allow me to invest my money the way I wanted to. And so the moment I left, I literally had no idea what to do, but I knew I wanted to practice finance. So I started this investment club, and that club started off with just 3 people at a cafe. And after that moment, I fell in love with teaching. And then fast forward 4 years later to today, I still teach every Sunday. And I get about 100 to 110 attendees. And through that journey alone, I got to meet engineers, investors, professionals all over Silicon Valley, as well as master my understanding of investing at the global macro level, right? We talk about investing into gold, silver, gold miners, uranium, oil, agriculture, but I eventually developed a sweet spot for enterprise software. And this is from me slicing and dicing the global economy in 11 different sectors. So companies like, Datadog, Sumo Logic, Snowflake, MongoDB, all those companies fascinate me. But if you're like a pretty, I guess you could say, sophisticated investor and you track the markets pretty actively, these are some of the most fastest growing securities globally today. So that's how I kind of primarily focus my investment thesis on enterprise software. So as I was teaching, eventually I met people that came into my life that really changed my life. The first one I would like to say is a meetup partner. And then the second one's a venture capitalist. The first one, the meetup partner, he reached out. He said, Kay, you're growing on the meetup.com platform. Why don't we team up and host events? And I told the guy, sure, where can I help? And next thing you know, we're hosting all these events all over Silicon Valley. And it got to a point where I was meeting about 400 people in person each month. I counted. And the ultimate thing I learned was that people were not able to remember my name. So I was the host of my own event, but people were calling me like, hey, you're the host guy, right? You're the startup guy, right? And I realized like, these engineers are too busy to remember anything. So I decided to brand myself as Enterprise Guy. And that also fits a investment thesis that I see on the world as well, right? The changing landscape of the consumer technology stack. Everyone has a higher level of digital infrastructure in their pockets today. It allows one to essentially build and distribute a lot more information more than ever. So I personally believe with that stage name, the thesis is that everyone's going to become an enterprise guy or girl. They just don't know it yet. But soon, as the global economics and the wage inflation and all that, and the wealth inequality expands, all that economics are going to line up. That's going to force the average individual to participate more on the, I guess you say, digital economy, as well as the influencer stack. So I'm bullish on that stack. And again, I think the individual today has a lot more digital firepower than they really know. So everyone's becoming an enterprise guy or girl, just saying that. So that's the story of the stage name. But what happened next was I eventually bumped into a venture capitalist at one of my lectures. And I guess he enjoyed the lecture enough to give me a call after and said, Kay, I want you on my team and do venture capital with me. And I said, sure, where do I sign? And so the rest is history. And so to date, we've done about 9 opportunities, and I think we're looking at our 10th one right now. So the 10th one's pretty interesting. It's in the Web 3.0 segment or blockchain, and there's also a billionaire who's also an advisor, investor in that startup as well. So still in the works, but that's where we are today. That's my intro.
Very cool.
Yeah.
Can you give us a little bit on your background? Like what got you into this? What was your I don't know, were you a little hustler as a kid and you were making money selling toys, or what were you doing? Like, what was the background? What got you into finance and got you moving along this train?
Dang, that's pretty personal. I think the thing that got me into finance and economics was just kind of like growing up. I wanted to, I guess it comes to a point in high school when you get out of high school, you got to figure out what you want to do in life. And so the first thing I did was I went to the library and I started checking out these books, and they were related all on self-development. So I went through, I little did I know I was going through sales training. So I was reading books on like Brian Tracy and all that. And, just kind of reading those books, it eventually made me realize like, oh, all these salespeople or all those self-development books, they keep talking about economics. So why don't I jump into economics? And so I started with self-development, moved to economic books, and that gave me a foundation. And then I realized like, a lot of the economics, they kind of revolve around a specific technology hub in the world somewhere, right? These financial centers, will you? And so that led me to the next thing where I started chasing finance. And then in college, I jumped into this investment organization in college and became the chief investment officer. And so I started running these stock market simulators in college. And what happened was, well, I played a total of 5 games. The first game I played, I was like top 5. The second game I played, I was dead last. And then the third game, and then that summer I said, I'm going to train really hard and study the stock market to win this simulator game. And so that summer I came back and then I got first place the third time. And then the fourth and fifth time I got first place. And it got to a point where they thought I was rigging the game because at one point I was the CIO or chief investment officer of the organization. And I ran the game and I won the game. And they're like, this guy is cheating. So he can't take the prize, but it's okay. I did it for myself. And that's basically what inspired the journey for me to get into security analysis. And everything really started with me mastering the public markets for the last 7 years of teaching. I'm sorry, 4 years of teaching, but 7 years as a practitioner, to now recently moving into the private market and analyzing like, frontier technologies and angel investment, private investing, and just the landscape, right? It's so different, but it's really nice to have the public market as my compass or guidance, right? I leverage that a lot because most people don't realize that the stock market, if you could pull up a portal, that is like the central hub of like worldly wisdom, where anyone that decides to start a business, if it grows to $1 billion in sales or whatever, you could see how it performs, right? You could pull up Boeing or a Chevron and you could see that, oh, well, eventually if I grow it to $1 billion, they only take home like 2-3% profit margins, or like the gross margins are very thin, below like 15%. But enterprise software, the margins are like 70%, and these stocks are just screaming higher, right? Now, of course, there's also macro tailwinds like money printing and all that, but it's a segment that I think will infinitely continue to perform, which is like this advanced technology segment, which is always going to be changing, right? So that's how I got into it.
Very cool. And what's one thing that nobody would know about you that you want to share?
Well, nobody would know about me. I'd say, I mean, interesting fact is at this point, I've done 181 lectures in the last 4 years. So
181 lectures.
Yeah.
That's pretty cool.
Yeah.
So that's like teaching a class, right? You're talking about
every Sunday.
You're talking about doing a presentation, and you're doing the same presentation 181 times.
No, I'm actually doing progressive lectures. So anything that interests me during the week, I'll put it up on like, on the weekend, I'll put in a few hours and just write up what I'm going to present. So every week, it's like a genius hour or 2 hours where I force myself to learn something new and just kind of better understand the world, right? So, yeah.
I love it.
Yeah, thank you.
So in this Genius Hour, have you done anything on the angel investing side and how you have built out this thesis around enterprise?
Yes, I have, but it was actually, my private investing or angel investing, the bulk of its thesis derives from a public place. And the public place, that thesis derives from just observing the world and what the world's doing. So it's quite simple, because if you look at public comparable, something like a Snowflake, that's enterprise software, right? It's trading right now at a 200 times price to sales multiple. So if you understand the mathematics of that, it's price to sales, not price to earnings. So price to sales at 200, that means if you go out there and you do $1 million deal, you just increase the company's value by 200 million, shareholder value by 200 million. And the market's willing to pay for that right now. Now, it won't be like that forever, but as long as this environment exists, then looking at the private side, investing into infrastructure software, anything that's part of Snowflake will be extremely lucrative, because the market right now, currently speaking, is pricing this at 200 times price to sales multiple. So a lot of my thesis is revolved around, if I'm able to develop or invest at the very, very early stage, then I want to pick a security, look at a public market comparable with the highest multiple, because that's likely to, well, have the quickest ROI. And then we could talk about the technology aspect of it as well, which gets super interesting.
Fire away. Keep
Yeah.
going. Yes.
I'll keep going. Okay, so I mean that was that's one thesis, right? Enterprise software, Snowflake. I mean, I think the simplest way to teach anyone what I'm doing is really, if you understand market structure, right? First of all, understand the market structure. Market structure is basically saying at the lowest level of transaction, you got the consumers, right? An average consumer will spend $5 on a cup of coffee, spend $25,000 on a car. That's typically the transaction size. You go a little bit higher, you got SMB, small to medium-sized business. Those businesses could transact 25,000 a month on marketing. And then you go a little bit higher, you got middle market businesses. Middle market would be like, let's say, a factory or doing logistics. So they could spend like 100,000 a month on whatever expenses. Then you go a little bit higher, you got enterprise. That's kind of where I focus, right? And enterprise is typically, those business models are global, and that's why we get these unicorn valuations. So whenever you're talking to a startup at the angel level or private level, you want to make sure that the opportunity is global. If there's no global opportunity, there's no billion-dollar exit. So global scalability is very important. So when we dive into technology, we want to understand that, okay, what could really scale? And software could really scale compared to hardware investing. Hardware has a lot of upfront costs, but software, you're building on top of existing infrastructures already. So before we get into all those, right, you got the consumer, small business, middle market, enterprise. And then the highest transaction level is probably at the sovereign level or government level, because the government level could spend upwards of 100 million on like commodities or whichever. So that's the biggest transactor, but then it's good to know the government's at the top because they print the money and it trickles down, right? And so what was your question again? I kind of lost my train of thought. It was
No, you're giving an example of if on your thesis and how the market is
right.
attracted to the enterprise market, and then on the tech side going to hardware and not, maybe not hardware, but going into diving deeper into how and why you invest.
So yeah, I do apologize. So remember that structure, okay? From enterprise down to consumer. And if you were to look at all the valuations across the spectrum, a consumer could build a small business like a cafe. And if you sold a cafe, a cafe or restaurant, it would sell for 1 to 2 times of earnings. So if the cafe made 100K, it'll sell for about 150, 200K. So why would you want to build that? Now you go up a little bit, you go into like middle market, you could sell a factory or a logistics business for, let's just say, a 5 price to earnings. So it makes 100K, you sell it for 500K. You go a little bit more into enterprise, which is public. You look at something like an Apple or Google or whatever, S&P 500 stock, they'll sell at a price to earnings of 20. So, PE of 20, you sell for 20 times of what you make. But then you go a little bit higher and you see this, advanced technology enterprise software or some sophisticated software, AI software. It's selling for 200 times price to sales, which is Snowflake is the example. So the question is price to sales, not price to earnings? Meaning these guys don't even have to be profitable. They just need to win the contracts. So as an investor, I'm thinking like, okay, do I want to invest into a cafe, a middle market, or enterprise? Okay, enterprise is lucrative, but then which part of enterprise? You could further classify, and you realize like software is just really, the markets are just really valuing it higher, right? Now, a fundamental analyst will look at that and say like, okay, well, the valuation's out of control. But I think I've looked at the public markets long enough now to come to a few conclusions, because these technology companies is a reaction of an investor and what they believe, right? If they're willing to pay, buy up this momentum, this price, they're seeing the world of tomorrow in how they bid their money, how they put their money. So I not only derive investment opportunities from this analysis, but also I get to see where the world's going next. And so most of my angel investing thesis is deriving from that high multiplier, right? Anything that's trading like a 50 times price of sales, like a Zoom or whichever. Zoom's probably 100, I forget. But I want to invest around that because I know I'm building something from 0 to 1, and it's going to sell at that price. And then you could further add, other possible tailwinds like, adding the demographic landscape. It's bullish for the older or younger generation, adding global macro to it. They're printing money, adding technological tailwinds like AI, machine learning. So there's many ways to go about it, but you start to figure out the blend of exposure you have as an investment, if that makes sense.
No, it totally does. And I love the whole, your whole thesis around enterprise software.
Yep.
We're a deep tech. I call it deep tech versus
Yeah,
enterprise.
yeah.
Own a software company we have for 15 years, and we build tech. So we build software, but I'm
Yeah.
a big fan of deep tech because you don't see companies that do deep tech anymore these days. Everybody's always front facing, business to consumer, B2C. There's not a lot of really complicated systems that are doing a lot of back end transactions.
Yeah.
So we're big fans of deep tech and
Okay.
fintech because
Okay.
those two are the ones that basically are going to run the world. And I think I talked about this, but they're great, but these are long-term plays. They take a long time to build, right? Like Netflix didn't start last week and become a juggernaut. They've been around for 20, 25 years, I think it is.
Yep.
And they've gone through a lot of transformation. They were selling DVDs. Like that's how much they've morphed their tech, right? And that goes for a lot of these big enterprise companies that have had to really deep dive into that tech stack and become analytical base. And, that's how they're forward facing to that business to consumer. Like they're really, the tech that they've built behind this, just you looking at different Netflix shows, they know how to change the image based on the preferences that you've looked at to attract you to watch this flick because that's generating dollars, more builds, and it's telling them what they need to do next. Facebook does the same, Google does the same. So there's the world's revolving around that 100%, and you're driving at a whole different footprint versus 2001 when you had the bubble crash and everything else. I think the markets are choking right now, and over the last 3 weeks, 2 weeks, they've had a tough time in the public markets trying to figure out where they're going to position.
Yeah.
What you're finding is that they're all kind of, COVID's bad, even though COVID was bad when it's all started. Oh, it's bad again. So the markets are dumping down right now. But the problem is that all of the people that are pushing out their numbers this quarter, they're all crushing them. So the market's like, no, we need to sell off so we can make more money. And the base market's going, are you kidding me? These guys are crushing their numbers. We can't just sink the market right now because of COVID. So I think they're fighting right now on where the base is or the bottom's going to be, because it's hard to go and crush the system when you have companies that are coming out and blowing it out of the water. Like today or this morning you had Shopify come out, crush their numbers. Well, if this morning they came out and the big money was going to crash the markets, they decided, well, maybe we can't today because 5 companies that were supposed to not make their numbers crushed them. So damn it, deep tech, what are we going to do? So there is this imbalance going on. And I saw this great stat the other day was that 80% of the market the US markets are owned by 1% of the US, and 90% of the market is owned by 10% of the US. So it tells you how these things are fluctuating, how they make money, and how they control the money flow of what's going on in these businesses. And a lot of money shifting into tech because it's stability, it's accessibility, it's a lot of things that we can't control, but the markets can, and they are, right? So
and it also that I love how we're kind of going at the macro level of like angel investing or just investing and then down to the micro. But what you just said made a lot of sense, and what we talked about last time as well is, you're talking about the majority of the market, 90% of the market is owned by a very small group, right? And so now we're in a global pandemic environment, the governments, at least the USA, they're forced to print money to kind of hold the markets up. My thesis is that it's going to create wealth inequality, and that wealth inequality is going to expand. No doubt about that, right? You see stock prices go up, Apple going up to 2 trillion. And we're kind of asking ourselves, like, is this like real? But when we know obvious productivity went down, so it's definitely a K recovery or whichever. But what I realize is that over time, if we continue to do this, you have to, as an investor, I believe you have to think about the demographic curve, because as you make the game more unfair or increase wealth inequality, generation Z, Y, X, and maybe then later X to baby boomer and silent generation, that wealth inequality is going to force the younger generation to disengage from the economic games because it's unfair. And it's going to take them to increase their attention in the digital economy. So as investors, we need to look at what the younger generation believes in as value, because there are other things that are emerging out there like Web 3.0 or blockchain and all that, and influencer stack and all. It's going to really, it creates opportunity, But this is like a dynamic that I'm seeing, that the older, I guess it's political, we're forcing the younger generation to behave this way because we're not letting the game reset. Essentially, we can't afford to let the game reset.
No,
Last time I checked,
you
looking
hit
at
it
the
right
USA,
there. You can't
we
afford to let the game reset. And that's really what's happening right now. Think
yeah,
about it. When the recession was supposed to hit in March,
yeah,
numbers came out. Oh my God, crashed. It wasn't even a big crash. The
yep,
bigger crash happened in the bubble in 2001, the financial crisis in 2007.
yep,
Those were crashes.
yep,
This
yep,
is like literally a miniature bump that was like, okay, panic sell. And
yep,
then they're like, okay, catch it. And then super hyper growth.
yep, yep,
6 months, they
exactly,
regained everything back that they lost over 5 years. And
yeah,
the thing is that and I was thinking about this the other day, and it goes back to the conversation we were having, before, when a company would come in, a new company would come in and pitch a big business, they would be like, you know what, don't have time, not
yeah,
really interested,
yeah,
because you're not really positioned. I'm worried that you may sink, and I'm going to lose clients because you're not really ready or you're not funded.
yeah,
So that was 10 years ago. Now, the problem is that, as you mentioned, they can't hit the reset button, but the problem is it's too high. And the
yeah,
bar is so high
yeah,
that people can't buy homes, they
yep,
can't buy companies, they
yep,
can't do anything because you have to be super financially rich. So
yep,
you have two options. You inherit money, or you find new markets that
yep,
aren't being tapped to get into. So
exactly,
the FOMO effect, which is, now you look at digital currencies, 5 years ago, they were nothing. And then all of a sudden, that was where everybody put their money in. So now they're super high priced.
yep,
Nobody wants to go into them. They're kind of fluctuating a little bit, but they're almost in tandem with the rest of the market because they're so high
yep,
priced
yep,
that everybody's like, okay, really, am I going to go and buy pizza anymore with my Bitcoin? No way, because the price could drop or go up by $400 tomorrow. So why would I go and throw my money in that? I'm just going to sit on
yeah,
it. So
yep,
I have a whole bunch of these assets that are all super overpriced, homes, everything, and
hmm,
they're all up in this top upper tier. But nobody will let them drop. Governments even stated, we
yep,
will protect real estate because that's everybody's piggy bank.
yep,
So if we
yep,
don't, we know the markets are going to crash big time. So
yep,
governments are protecting that, where in 2007 they weren't protecting it. They
yeah,
were like, you know what, we can't do anything about it. Financial crisis, you caused this, too bad, you're all going to deal with it. So they
yeah,
crashed. They spent I think $2 trillion in the US to
yeah, yeah,
correct.
yeah,
Now, this crisis is not caused by anybody per se. So
yep,
now they're saying, well, we got to protect everybody and we got to save everybody. So we're going to go to universal income. We're going to do all these things, but
yep,
we're going to spend as much money as we can out of this. So
yeah,
now Canada will be in its first time hitting $1 trillion deficit.
yeah,
Never
yep,
happened before. And the US is probably going to have 5
27
million triple,
or
in,
debt, yeah,
trillion in debt, but they
yep,
don't care.
yep,
And everybody's like, we got to protect our assets, which all this does is means that in 6 months or a year,
yep,
that home you want to buy is still going to be 30% more expensive.
yep,
Your
yep,
averagely rate for hiring somebody is still going to cost you $50 an hour, and
yeah,
it's going to just keep going up. So the problem is that you're reverse inflation. You're going to have the same problems you've had in countries that had bad inflation, which
yep,
is like $5 million to buy a hamburger.
yep, yep,
You're going to have the same problem here, except for that $5 million to buy a hamburger is the only way you can pay someone to actually do work and get that hamburger.
yeah,
So there's got to be a reset button somewhere that levels things back to normal,
but
because we're all trying to win money. And that
yep,
money is causing the dollar to keep getting so expensive that you're crushing everybody out of the market. So the poor are going to get way poorer,
yep,
and the rich are going to stay rich, and the divide is going to separate at a crazy rate. And startups are going to suffer in this because it's going to be hard to get investors to invest because their dollar's losing value just by putting money into something that you got to wait 5 to 7 years on, because it's not carrying the same value.
yeah, I think you're right. Like economically speaking, the game is pretty stretched, and they did a good job of putting away the economic invisible hand, let's say. And right now, the markets are very driven by politics. And if you ask my honest opinion, looking at the financial structural forces of the governments around the world, I think they don't have a choice but to print money. And so the worser of two evils is probably wealth inequality is better than total chaos and destruction. So my belief is that, okay, the thesis, even though this is not about global macro, I could talk about global macro all day. My thesis is that they're going to print a lot more money globally. It's going to be synchronized. And as they print a lot more money, investors will be forced to chase something that's finite. So don't chase money or fiat, chase a cap table, which is finite.
Yep.
That's the angel investment thesis.
So does that mean that you're going to end up, or they end up creating more net value, net worth, because they're pushing so much cash out? People, just like when they were giving everybody $2,000 a month,
yeah,
days to work. Well, I don't know what it
yep.
was in the US, but in Canada we had the 2,000, right?
Yep.
So does that now create, because there's all that free flowing money,
Yep.
does that bump up net worth? And now everybody's looking for the next deal. So now everybody's pushing their money out.
Yeah.
They've got nothing to protect themselves. So they're all
Yeah.
risking like crazy.
I think the leaders of the world it's basically painting and saying, hey, there's nothing going on here. Keep the game going. Keep playing. So I'm not a fan of it, but when I look at big venture funds like SoftBank being the biggest one, raising 100 billion, I don't know about you, but to me, the model that what it looks like to me is that what they're doing is, we got 100 billion, we'll go out there, buy the cap table. That's finite. Doesn't matter about money. Buy the cap table. We'll accumulate enough equity position. Now we have an equity portfolio. Go to another investment bank, borrow against it.
It's
crazy.
So
crazy.
where do you think that sits then with? And today I was on a panel where they were saying, angel investing is now a new asset class. I've always thought it was an asset class. I didn't think it was new, but apparently now they're classifying it as new.
Yep.
They're saying, you know what, allocate 10% here, 10% there, like whatever you can. But from a risk and expense standpoint, even the valuations of companies you would think of would have dropped because of the pandemic. They're actually higher now.
Yeah.
I've seen pre-money valuation companies were raising 5 million on a 20 million valuation. We have zero sales. We've got a great platform, and it's just how? What?
It's a zombie environment. I mean, I look at the public markets, and a lot of the enterprise software companies that are just appreciating from 5 to 20 billion, let's say, it's all zombies. It's price of sales.
Yep.
I mean, we're just moving the game out a little bit, because look, time is only going to keep moving forward. It's not going to stop and be respectful of like where I'm at or where you're at in terms of age. So I think we just have to listen to the politics now, because again, they put away the invisible hand, and we got the visible hand, and the visible hand is saying you got to keep playing, because if you don't, it's a worser case scenario. And they just have too many promises and entitlements that they have to the older generation, right? Social security, defense, education, healthcare, all that stuff. They just have to pay it. And so I think nominally they're going to pay it, meaning I'll give you those checks. I'll give you $2,000-$3,000, right, to pay what I owe you, because I promise you. But on a real basis, I think they're devaluing the currency. And so in my lifetime, I mean, I'm a millennial, right? But in my lifetime, I still believe that we're all going to use the dollar, just because if you understand the technology adoption curve, mainstream market doesn't understand the dynamics of money and being printed, right? Yeah, we have internet culture. It seems to be distributed now, and everyone's saying the money printer goes burr, right? But I think, looking at the level of financial literacy across the board, because I'm an investment lecturer and I meet hundreds of people and lecturing to them, I realize like we're still going to use the dollar in my lifetime. But what's different, in my opinion, is the value of the dollar. It might be significantly lower. So, in that case, it would create an inflationary tailwind for equity prices. So I think we've evolved the game away from chasing fiat, right? That's previous value. The new value is chasing equity cap tables or equity percentages, because I mean, you could chase Bitcoin. I'm bullish on Bitcoin from a demographic perspective and mathematical perspective, but as long as the politics remain in play or in place, they could easily declare that illegal, whichever. That makes it kind of risky. So I think, real estate and equity ownership, that's part of the legal system, and that's going to remain, right? Because my understanding is that a billionaire is only worth a billionaire as long as the legal system remains in place. So if the legal system collapses, which we're all protecting essentially, who says you own that $100 million building anymore? So in a way, when I look at like 5,000 years of history, I noticed that empires would rise and fall, legal systems would rise and fall, but the one thing that remains is technology, I believe. Like technology over 5,000 years of history, it just kept evolving forward, while legal systems and empires collapse and then reinvent themselves. So I think we're getting to a period today where technology has just went on an exponential curve, while the legal system is just remaining constant. And so that exponential curve, with the difference of that constant legal system curve or line, creates a huge opportunity of delta for undiscovered margins and investment opportunities. But it also puts a lot of stress on the legal system. So, I mean, we could get super political, but this is kind of how I'm shaping my thesis as an investor and then shaping my performance in the private investing landscape, also public.
And you got to do those things because I think, and I like, again, how you've broken this down and how you've kind of researched out where you're getting opportunities, because just like anything, if you're going to invest your money, and I remember 20 years ago when I spent 18 hours a day trading stocks, and I was be up researching who was going to pop. Back then, you could actually almost predict it because it was based off sales. It was based off revenue generators. So you could figure out that this company was going to come out with some big numbers and the stock would pop. Well, today they've shifted that all around. Facebook won't tell you how many new users they have because it's an irrelevant data point. Why? Because it's about their revenue now. So if you base it on their new users, which Netflix is going to go to, they're at saturation. You know, it doesn't matter that they've got 2 million or they get another billion, 2 billion, but they're going to get the next billion. It almost is irrelevant. It's more about what they're going to do with those, the revenue that's coming in. Are they able to get that 40% increase in revenue? What were they doing to get more out of those users? And Netflix isn't at that. They're not in this market isn't at that space right now. So now they've had a big decrease in user acquisition, which they were supposed to have 8 million. They had 2 million. So they were way off. It looked bad. They put the projections in. So they get a little bit crushed. But when you look at the revenue model, it's going to start to shift. They're going to have to start playing off the revenue model. It's not about users anymore. So the other thing that goes in the big markets is that everybody, when there was issues occurring, and you saw this at the beginning of the pandemic, people started to dump into gold. And today, gold is still highly priced, but nobody's dumping into it anymore. Everybody's like, wait a second, I should put money in gold? Why? What's it protecting? Gold is just as a loser than the rest of these companies. So I don't think I need to go into gold anymore. I'm going to dump all my money into securities because at least that way I know the big governments and the tech have to pay money into this. So they're going to be more stable than gold. And since these other countries own it all, I'm going to change. So now when you get into startups, it's the same. Am I really looking at my portfolio and deciding which ones can I invest in? Or am I shifting everything to what actually makes the most sense based on the times that we're in and saying these companies are going to survive, which then that means all new startups are focusing just on organics. They're just focused on stability and being able to weather through a 2-year pandemic or a 10-year pandemic. And the rest of the things are going to have to do it and make it on their own. And we're going to have to hope a bank decides to take the risk on them in order for this to survive and to startups to have that space. So now you're seeing a massive shift in how startups are functioning because they can't get funding, which is AI, blockchain a little bit, AI, all software, and everybody else is, having a tough go. So that could create an opportunity for investment as well, because those companies are now in stealth mode and they can slowly grow and be profitable without anybody knowing because they're not really being paid attention to.
And you have to find them. Private market investing is completely different than public market investing, where it's simply go onto a web portal and click a few buttons and you have exposure. Private market, completely different. And you got to be a great deal sourcer. Essentially, angel investing is being a great hustler, in my opinion.
Yeah, you can create a great funnel too. And I was thinking about this, we have a great funnel, but really at the end of the day, if you're not going out there and hunting, you're never going to find the best if you're not hunting. And that goes for any company you work for. You got to hunt. You got to really figure out where you need to be and go and corner that market, right? You can be the #1 blockchain investor, but if blockchain's not getting the love and attention that you need, it might be short-lived. You got to find things that are currently relevant and getting a lot of attention, right?
100%.
Well, that's brilliant, man. And I know that we've had this discussion a few times, which is gets better every time. So I guess now that as you've been working through this thesis, maybe you can give us a little bit of an idea of the type of structure and the way you guys operate, because what I love about your model that you guys do is that it's so unique. But the best part was that excuse me, the GP, the owner of the fund, what's his name again?
Thomas on.
Yes. The way Thomas said was that, and this is what I loved about the conversation I had with Thomas, was that he said, I want to create a new group of investors. I want to bring in younger people that can invest and take the gauntlet, if you will, and
Mhm.
change the way the world works by bringing in and helping younger people understand finance and invest. And I thought, like, that's brilliant. I want to make sure that our investors are getting returns and making money and doing all those things. And he wants to bring people in younger, get them into the mix and start investing. And I was like, man, that's phenomenal,
Yeah.
because nobody thinks that way, right? They're always just thinking, I need to get the investors that have been doing this for 100 years, get them
Yeah.
in here, working away. And that changed. So maybe you can give us a little breakdown on that, because I think it's fantastic.
Yeah, I think the model is pretty simple. The model, the way it works is, I think you also find this with other venture scouts that exist out there, right? I think Sequoia Capital has a similar program,
Yep.
but what it is essentially at the top you have I guess the venture, the holdings or the family office company, and then from there they will basically, that entity will be a GP of the new entity that you create together. So my entity is called Enterprise Guy Ventures Limited, and together we split 50-50, myself and Thomas. And so that every time I source an investment opportunity, the mothership holdings company will wire the funds into that other entity, and then we will deploy the investment into the startup, and then in return we'll get like the safe or the convertible note. So that's essentially the model, and it's split based off of the equity ownership.
I love it.
Mm-hmm.
Love it.
Mm-hmm.
And you guys are now a team of, is it
18 or 19? I think it's 18.
Just under 20 people, right?
Yeah, just under 20 people.
It's brilliant.
Yeah.
And he's creating a whole new area of investors, which I think is so awesome. And everybody has their own thesis. And
Yeah.
they're hustlers, and they're all going out and finding great deals that they can jump into.
Mm-hmm. Mm-hmm. That's exactly it.
Oh, I'm sold. I might actually have to come work for you guys. I just think it's brilliant.
Yeah, I know. I can't wait. I like to see that too.
Yeah, no, that's good. So tell me a little bit more about when you're working with the startup and you get into working with them, because they're coming from a different approach. You're not coming in from a pure like pitch, DD, legal DD, like going through this whole spectrum. You're doing a lot of the research. You're approaching them and saying, hey, I want to invest in your company. How do we go about this?
Yep.
Can you give a little bit more description on that? Because it is so much different than the way an angel group works or the way a VC works.
Sure.
You're basically structuring a whole different platform for how you deal with them. So maybe talk a little bit about that.
Yeah, I think this model that I'm kind of operating, or my deal sourcing prospecting strategy, it's really classic enterprise software sales. So that was my background as well. And the difference between enterprise software sales and regular sales, I like to say, is that when you jump into enterprise software sales, you're leveraging the latest and greatest technology stack to accomplish sales development and sales closing of a transaction. But if you're in an outdated company like Morgan Stanley, which I came from, they were just saying like, hey, just get on the Excel sheets and hit the phones, and you're not really leveraging a CRM or a mass email tool or social media and all that. So that's the difference with enterprise software sales or latest and greatest bleeding edge software sales versus like traditional sales. You have to leverage a lot of technology to get your quantitative up. But to kind of get you more details into the process of how I do it. So the reason why I explained that is being an angel investor is essentially a salesperson. It's all about the network. You have to build up your network, your ecosystem, and later that also helps my portfolio companies and stuff. So the process is, I personally like to go direct. I personally develop my own, I guess you could say, startup inbounds, right? And I'll tell you exactly where I get all my deal flow. I could get it from LinkedIn inbounds. I get a lot. Like I have like 200 plus LinkedIn requests, but I just never engage in those startups because I kind of just know, I know what my thesis is, so I won't engage unless they fall into my ecosystem. Because I'm not just looking for a startup, I'm looking for the people behind the startup and their network economics and all that. So going back to where I get my deal flow. So LinkedIn is one of them, right? My VC connections I have. If you're great at building relationships, you build friends with like product thought leaders or other VCs. They have deal flow, and then maybe a company like, let's say like Trinet, right? So I have a friend in there. They get a lot of startups. So anyone that you could think of that gets a lot of startup deal flow, be friends with them, build a relationship there. But 99% of my deal flow comes from my own efforts of outbounding. So it's like 99% deal sourcing myself. I reach out to the startups first, and I'll tell you why. My belief is that if you want the next unicorn, right? They'll probably come through the accelerators and stuff. But the issue is that it's like once a home goes onto Redfin or Zillow, everyone knows about it. Once a stock goes public, everyone knows about it. So all the margin opportunities are squeezed. You always need to find an opportunity that no one knows about it. And the issue with accelerators, in my opinion, is that they're also a business model themselves. They want to build up a large ecosystem so that they win the deal flow. So now you, as an individual investor or angel investor coming in building your own deal flow, how do you do that? You have to build up your reputation. And going back to my thesis earlier that everyone's going to become an enterprise guy, meaning consumer technology stack is going to be more advanced than ever. Everyone can build an individual brand today more than ever. So I like to go direct because the unicorns I don't think you will find them at accelerators, but the big, the awesome unicorn, decacorn or whatever comes from direct outbound. And I'll tell you why. Let's say that example, startup Okta employee number 3. For those of you who don't know what Okta is a identity access management enterprise software company, valued right now at 27 billion in market cap. I engaged Okta employee number 3 through an outbound, right? So what's his history? He pioneered a $25 billion corporation product. The next product he built sold to HP Enterprises, and now he's working on this third startup, and we recently invested into them. If you just understand where he came from a track record, he's so pro that you'll never find him at an accelerator. So how is an angel investor supposed to source this deal, right? You can't just expect yourself to go on Angel List or whatever, and the deals will come to you. Someone has to source it. So sourcing has its ability. And you see this in the way technology communicates to humans, which I find pretty fascinating. The way technology is evolving today is basically saying, hey, you're human, so you be human as possible. I'm technology, let me be technology. In other words, technology is automating everything away. And it seems like we're coming to this ultimate conclusion that it needs to exist on its own and let it be technology. And you have to be as human as possible, which basically means, a salesperson. So you have to leverage a lot of your human capabilities, going out there and directly engage with the startup. So that's my belief. I think the best ones will come from your own efforts of direct engagement. And if you do it long enough, you start identifying this higher caliber of startup ecosystem that exists out there, right? So let's just say that you got the lower tier startup ecosystem, the mid tier, and then the high caliber tier. And then you realize there's just basically a few deals being passed around top tier VC firms like Greylock, Sequoia. So my goal is to intercept that flow of people or network that will never flow to an accelerator, because I'm a third-time founder. I don't need to go to accelerator. I just need to put my head down, develop the code, and engage with my customer. So how do I, as a stream of network, engage with that network that will never find itself at an accelerator? You have to build a network with the brightest, highest caliber investors. That will get you extremely far. And that's my thesis. And that's my effort, prospecting, sourcing.
I love it.
Yeah.
No, it's good. And I'm glad
you. Gets me pumped.
What's that?
Gets me pumped.
No, I like that, man. I'm glad you're able to share that. That's fantastic. Props.
Now, there's also quantitative numbers to it, but that gets into the super technical aspect of all of it.
For sure.
Yeah.
I love it. Well, I appreciate you sharing all that. So now what we're going to do, because we're at that time and you and I, we know we can talk for about 2.5 hours.
Yeah.
The longest conversation I've had in probably a decade. So let's just jump into the rapid fire questions, and then I've got a few other things. But you know what? You took us through some the markets and everything. It was a great deep dive on the overview of everything. So I love that. It's unique. It's different. It's not your typical way of looking at how to make an investment in finding companies. So I love it. All right. So first question.
Sure. Let's do it. Hit me.
What's your favorite part of startup investing?
My favorite part of startup investing is geeking out to the frontier technology. I am the difference between public and private is that in public, I used to think public was pretty advanced, but once you hit the private and you're having a conversation with a founder and a startup that's talking about technology that does not exist in many, many hands yet. And it's just so exciting to see the technology, the trajectory and potential of this. It just, you get this feeling, right? And then also you get to hear the founder's thesis on the world, because that's the thing about this world. The more the mass market gets marketed to, I feel like there's less genuine people. And so when I sit down on a call with these guys, it's just I'm hearing your genuine thesis on the world of what you've collectively learned so far and where you think the world's going next.
I love it. All right, more rapid fire. Okay, quicker.
Okay, yeah, sorry, we gotta go quicker.
How many companies or dollars do you invest per year?
So I'm relatively new as an angel. Done 9 deals. When I started 6 months ago, I planned to do 5, but I ended up doing 9, and we're on our 10th now. So every year, hopefully, we could do 20.
Well, you're already surpassing most angels in 6 months, so that's fantastic. You're breaking averages here. So
Yeah, thank you.
most angels, I'd say on average, invest about 5 companies. This isn't super angels, just as regular angels.
Yeah.
Which is phenomenal. Anywhere
Yep.
between 3 to 5 companies. So you're crushing your numbers, which is good.
Yeah, awesome.
You at this point, I'm going to guess you don't do follow-up investments because you probably wouldn't have had a chance if it's only been 6 months.
Yep.
Okay. Any notable portfolio companies you'd like to share?
Let's see. There's so many. I really like them all. I think one of my favorite ones. I might be sharing too much. That might be an issue as well.
You don't have to name any names. Whatever's easy. Just something
Sure,
quick.
sure. So one company that really inspires me is that it's taking such a strategic position in terms of like infrastructure software. My thesis is that the world is going to consume and produce a lot more software. And one example is consumption of, like, let's say TikTok. So the whole world is getting onto TikTok, consuming that software. And then this is just a little middle software that powers that platform of the world. So that's that's my favorite in terms of like infrastructure software. And yeah.
Love it. I love it. And
Quick
and
answer.
TikTok, you mentioned earlier, man, everybody is now their own promotional vehicle. And
Yeah.
TikTok is the impetus to all of that, because
Oh,
that's
man,
what I look through all the time when I'm on TikTok for that 10 minutes a day, maybe. It's purely just, here, look at me. I got some smart intellectual stuff to share, or some funny stuff. Whereas Instagram's more of, hey, look at me, my glamorous life. I find that that's terrible and Facebook compared to TikTok, which is actually cool, and I've got some interesting stuff I want to share. And I actually find it a better product than Instagram.
Well, it is social media 2.0, and it is leveraging a recommendation engine versus a search engine. And we are moving into a new era here of overloaded information. So in the, what do you call it? The explosive information age, search engine dominated Google.
Yep.
But we just moved to the overloaded information age, where now everyone can produce information. So in the future, we're going to benefit. The future is a recommendation engine, and they're saying in the future, you no longer have to search for information because information finds you.
Well, and that's the part that I dislike, which is the creepy side of it. Phones now more than ever are listening into everything we're talking about, and every ad served and everything that does come up happens to be the conversation I had 15 minutes earlier. And there's a breaking point where it's so intrusive that it's actually becoming quite frustrating.
Yeah.
I already own a power saw. Because we talked about them doesn't mean I need an ad about power saws.
Yeah.
Or I shared a picture of a power saw, now I want to buy one. So it gets a little too intrusive, and I'm not sure why people aren't complaining about this. They tell me all the time, oh, I did this, but they actually seem fine by it. And I'm like, you don't think that that's odd that the computers are all listening to everything you do? Regardless, man, we both suck at doing these rapid fire questions.
Yeah, I know, exactly.
Okay, any verticals you like to focus on?
Verticals, let's see. So enterprise software, that's probably horizontal, but vertical would probably be infrastructure, cloud infrastructure, productivity software, telehealth, blockchain or Web 3.0, social media, and I might forget anything else, but those are the typical verticals.
Okay. Timeline for investment? A week, 3 months?
No, much longer. I'm looking at 5+ years, but I'm not even thinking about the time frame.
No. I meant when you make an investment into a company, is it due diligence take you a week, a month, 3 months? How long does it take you before you make a decision that you want in on that company and that you make the investment?
Case by case, it could be as quick as like, oh man, I love it already. There's a billionaire on the cap table. We got to get in. To I gotta do a lot more research because this is Web 3.0. I don't know Web 3.0 too much, so it could be anywhere within 3 weeks.
Okay, cool.
Yeah, average maybe a week.
Do you look to lead rounds or take board seats?
That's what my partner has planned for me. So he says. So I have yet to find out. I'm still new, but yeah.
Okay. Well, in time, you get to work your way up. It's good.
Yep.
Is there anything else you do outside of financing to help the startups that you invest in?
Dude, I do so much because I think I came down to the model, right? Every startup has to go with product and customer, and you just repeat. So I'm building up my network all the time so that later I could send them to my startups. So building network, building up my knowledge, my investment thesis, and helping them with fundraising. So I'm building both on the VC side and the customer side. If they need me to reach out to a CISO, I'm reaching out to CISOs. So I hustle just as hard.
Good. I love it. We need you in our fund. You'd be fantastic. Okay. I like it. I like it. All right. So we like some heartfelt, I don't know what the saying is, like tug in your heart kind of stories. So do you have any stories so far of the companies you've talked to that, you know, could have been a great company, but just didn't make it through COVID, or they were not going to make it, and then COVID made them skyrocket and you really fell in love with the owners? Just looking for one quick story about something that just really changed your whole philosophy on humans and startups.
That's a big one. I actually don't have a story since I fell into this gig during the peak of COVID, right?
Yeah.
But you know, what I've realized, I guess if I could share anything else, is COVID has really changed a lot of things. I've seen a lot of small business owners lose their business, and I've seen a lot on the other. It's always a flip of a coin. I've seen the other side, the digital business owners, they've significantly benefited.
Mm-hmm.
So if it's anything that I've learned, is you always gotta be hedging or having some exposure on the other side. But unfortunately, I don't have a story, a heart-touching story.
Well, you will one
Not
day.
yet. Yeah. One day. Not
We'll
yet.
save it for the next time we chat on this. This is
Yep.
good. All right. So I guess we'll shift quickly.
Yeah.
And you mentioned earlier, but we're going to go quick personal for a second. I learned this from one of the podcasts, which actually they were pitching today. They came through our Skip the Line event. Awesome guys.
Yep.
And I listen to their podcast because they do a lot of sports. They're called Title League. Big fan. And one of the things they do at the end is they ask some questions around personal things. And I thought, you know what, this is a great way. I need to be more personal on my calls, not all business. So the question for you is, what's your favorite sports team?
Oh, that's so bad. I'm not in. I don't watch sports.
Okay, that's okay. It's allowed.
Yeah.
What's your favorite hobby then? How's that? What's your favorite?
My hobby is truly investing. I enjoy this stuff, and so I spend a lot of my time into it.
Okay,
man,
we're both terrible, but we need to work on you getting a hobby, because the hobby can't be what you do every day, because then eventually when you get really good at it, then it's a job to you, and then it won't feel the same way. So you need to have something that gets you away from things. So we'll come out one later. But all right, favorite movie.
Favorite movie. Oh my gosh, these are some, probably Benjamin Button. I watched that recently. I thought it was pretty. It's so deep in a way that, to start your life as an older individual, and you start to see, in the beginning of life, it's not consumption, but he starts to see like people dying and passing away. You see such a sadness in the beginning, but then he starts growing younger physically, but then maturely in the mind. So I find that movie so touching, and on so many different levels, that's probably my favorite movie.
And which character would you play in that movie?
Dang. Wow, you would ask that too. Well, I guess I'll probably play Benjamin Button. Yeah. Get to grow younger.
That's who you feel you represent at the same time? Yeah?
Maybe. Well, in a way, with what I know, I feel like most of my peers don't. They're still going to raves and stuff, I guess. Well, there's no more raves now, but they're just kind of on a different wavelength from me.
No, that's okay. I haven't seen Benjamin Button, but I'm going to take a look.
Oh, you should. Yeah.
I was chatting with this guy yesterday from the US, and he was all about Star Wars. And the first thing that came to my mind was, oh my God, this guy's like Lando, like reminded me totally of Lando.
That's hilarious.
Like strategic, smart, super high energy. And then he's like, I kind of feel myself as being Yoda. And I was like, I like that. It actually still fit. He goes, the calm, the thinking. I'm like, yeah, that's good. But then on the other side, and I told him, I'm like, you're more of a Lando. And he's like, no, I know. I'm a bit of both. It works in there. And I'm like, totally.
That's hilarious.
So that's good. I'm going to watch Benjamin Button just so that I can see that reference.
All right. I'll remember that.
It sounds like it's got the heartstrings pulling and all that, and it's a good flick. So, well, either way, I think, Kay, you did a fantastic job. I learned a lot. The audience is going to learn a lot.
Thank you.
I appreciate the candor, and of course, learning more about your favorite movie and character. That's always a good thing. I like to do this stuff because at the end of the day, when someone remembers who you are and they reach out to you, they use that as a reference point. We all
Oh
need
yeah.
need some unique identifier, and that's usually what it is. It's those little things that they can relate to, because no one can always relate to the big picture. I'm an investor.
Yeah.
That bores out over time, right? So it's
Yeah.
finding things that make you creative and make you fun. So
Yep.
I love it. Thank you very much for that. And in our fashion, as I take lots of notes, one thing that I do want to we leave with the show with is we like you to have the last word. So is there anything that you want to share to the investment community or to the startups, something that you think that they should know or pay attention to or be open-minded to, whatever you like? We leave you with the last word.
Sure. Wow, another big one. I think with the trajectory of the world, and this conversation might have sound very capitalistic, but there are some evidence within technology, in my opinion, and interacting with humans at scale. I met 400 people in person each month. Is that everything seems to be pushing towards relationships and caring for one another, right? So if you could have the right foundation, a good value system, I think it'll set you up really well in this game of private and even public market investing. I think relationships are everything. So the last word would be, take care of all your relationships, treat people very nicely, and good things will come. Because I didn't come from like an Ivy League school or anything, right? Very humble beginning and all that. I just knew that I loved investing, and I just kept teaching on investing. So one day a venture capitalist saw what I like to do and just pulled me in. So not the traditional path to becoming an angel investor, but I accomplished becoming an angel investor through just being nice to people. So that's probably the greatest wisdom and lesson for me.
I love it. And
Yeah.
brilliant. Very well said.
Yeah.
I'm a big fan. So, okay, what you're doing. Keep
Thank you,
sharing,
man.
keep being
Yeah.
good people. And thank you very much for joining us today. And for the introductions you've made, you're still a rock star, 100%. Don't change.
Okay.
And, we know whatever we can do to help. We're gonna support you at the same instance. But if there's anything else we can do each other, we're certainly gonna make sure that happens.
Yeah.
And thank you again. We'll let you know when we're ready to send this out. We're trying to push more of them together sooner, quicker, and faster. Because
Yeah.
right now we're not deploying till January, doing them one a week. So we're trying to figure out how we can speed this up. Just because people are going to forget they had the conversation by the time we roll it out. So
Yeah.
might start doing 2 a week and just rifle them off. But we
Dang.
a lot of great people, and I'm so glad that I get to do this. So thank you very much for your time, man.
No, you're very welcome, Jeffrey. Thank you so much, man. Really appreciate it.
All right, that was fantastic. Okay, big fan of what Thomas and the guys are doing and how they're rolling this out. Whole family office and being able to get more investors and more younger people coming in and finding great investments. And I think it's brilliant. So I'm glad that we were part of that. And we had this conversation. Great discussion around global markets and how everything funnels down to the startup. So it's something worth checking out. But thank you guys. And I don't even know how I can go in and really break it down. There was just so much good stuff. So, Kay, you're a rock star. Thank you, everybody.